handed me a file that seemed routine.
You're the one, shine brighter than the moon and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all.
All right, let's get started. Good evening, everybody. Good evening. Okay, yeah, let's get back on that one here. It's 8 o'clock Eastern time. Let's hit the button. All right, good to see y'all here. A lot of people joining in online here. Still a lot of people coming in. We've got the yeah, come on, gang. Live streaming, YouTube live streaming, all up and running. Okay, everything looks pretty cool as far as I see. Anyway. Okay, one more thing I got to do with that is to get the questions box up and running. There it is right there. Okay, we got that too. Okay, all right, all right, all right. Okay, all right. Good evening, everybody. Welcome to DayTradeSPY.com's weekend review. Excuse me, Sunday, August the 16th, 2026. A lot goes into this, you know. A lot goes into this. A lot of preparation, a lot of research and stuff like that. So my name is Hugh, and let me see if I can get a light on here. This is going to get a light on the subject. I think if I raise the blinds on these blinds, I might be able to get a little bit more. I might have to close the blinds in behind me. Yeah, it's such a nice night out there. I didn't want to really do that, but I'll have to bring it down. I'll bring it down a little bit. I'll just take a look here, see if this is a little bit better. Okay. There you go. Kind of get a little of both. You get the background and some light on my face too. So this way I'm real. I'm real. We're live, real, and we're gonna have fun, right? That's what it's all about here. So my plan is not to hold you all night. I want to wrap it up before an hour. Um, but I say that every week, isn't it? Then we tend to go a little bit longer. But I think this week we're going to just do that because it's such a beautiful, beautiful evening out, and I don't want to kind of take you away from that. If it's nice where you are, it's nice where I am here in Western New York area. So anyway, we have a questions box. My name is Hugh, by the way. Please use the questions box for any questions or comments you might have. I'd like to answer them all if possible, and get to some of your questions and comments. All right, and what else are we going to talk about here? We'll talk about here last week. This is what we're going to talk about last week review, the upcoming week. A little 2-minute tutorial. Going to answer your questions. Get a little contest at the end, and the winner gets an ebook. The ebook is going to be Triumphs and Tragedies. Let me get a piece of paper here. Triumphs and Tragedies ebook, and that is going to go to the winner. Triumphs and Tragedies. And that ebook is going to go to the winner, whoever that will be. Okay, excuse me. We're get moving here. Okay. All right, let's take a look here. So there's the standard disclaimer. And hello from Houston. Hello from St. Louis. Okay, yeah. Well, chime in where you're from, folks. Anyway, just give me a minute to read this disclaimer here so that you understand there is risk with trading options. Okay, there is risk with trading options. I'm not going to kid you. If anybody says that It's easy. They're lying to you. It's not easy. It's simple, but it's not easy. Excuse me, because we have basically our emotions. They are the ones that are going to be guiding us here, probably more than anything else, more than we want. But if we can make ourselves like robots, we'd be really well off, wouldn't we? But unfortunately, emotions get in the way. But you know what they say, emotions belong in your love life, not the stock market. Anyhow, all right, and let's move along here. You're alone responsible for all your own trading, and past performance does not guarantee future results. No, that said, good trading, folks. Good trading. That's what we always say in the morning. Folks, my name is Hugh. All right, why listen to me? I'll tell you why, because I'm going to quickly go over this. Oh, that's too quick. Let's go back. Let's go back a notch here. So I studied this stuff from a long time ago for my own benefit. I was never meant to go teaching anybody, but I learned a few things and started bringing home, a lot of the toys and different things. People took notice and they coursed me. They twisted my arm, said, "Oh, you just please show us. Please show us. We've been trying this and we've been toying with it and dabbling in it, but you seem to have gotten a grasp of it. So, okay, fine. I'll show you what I'm doing. Not sure it's going to work for you. I hope it does. But this is what I'm doing. It's kind of working for me. So, and excuse me, something in my throat here. It was in 2010 when we started showing people live publicly what we're doing. Started with the inner circle, went to ebooks, training courses, different things like that, trading room, and been doing it continuously ever since. 2022, Eagle Financial Products division of Salem Communications bought us out. Then they hired me back. They brought on John Johnson, another retired Eagle guru, and he became my my co-host in the trading room. Great guy, wonderful guy, love retired lawyer, and but he gave applause. He gave applause because trading facilitated his lifestyle that he wanted to have. He wanted to spend more time with his kids, grandkids, and he saw trading as the vehicle with which to do it. Smart guy, and took the pressure off the legal world, and now he's just trading and teaching people, and he loves teaching people, and so do I. So we kind of came together. It was very fortuitous. Is that the word I'm looking for? Serendipitous. Is that the word? It was very cool. We both came together. We come to the same place from different directions using different indicators. And one of our sayings is that when our indicators unite, our trades ignite. A lot of truth to that. He uses things like Fibonacci, Andrew's pitchfork, other things. I use support resistance, exponential moving averages, different things, chart patterns. And sometimes we conflict. And very often, though, we come together, and like I say, when our indicators unite, our trades ignite, and there's a lot of truth to that. So, if he says, "I think the market's going to go up next little bit here, it's just ready to pop out," and I'm looking at my indicators and I say, "Yeah, I see the same thing, man. You guys might want to buy some call options, right?" Anyway, and there's an one here. Hello from Toronto. Hello from Toronto. Okay, it's good to have you here, Sasha. Your first time here? Let us know. Let us know. And we have a few people there. Let's see, we got Neil, Fred, Angie, Danielle, a few others from the Toronto area. Anyway, I look for short-term breakout trades. After I mastered some pretty cool strategies from the trenches, I've got a very simple philosophy. Now, look at the stock market is a very complex, overwhelming, complicated. There's so much out there, so many things you can trade now. Yeah, when I started, we didn't have crypto. There's no crypto. Non-fungible tokens or assets or whatever. What is that? Somebody takes a picture and they sell it for $1 million? Really? Really? I kind of shake my head at some of the stuff. I looked at futures. I kept coming back to this thing called options. I really understood options. I felt very much that was my mothership. Well, actually, when I discovered day trading SPY options, that was my mothership. And that's what I really enjoy doing. By the way, this finger, I broke this finger about 10 years ago and I never got it fixed. I can't bend it. And I feel goofy with my finger there. But I was, I grabbed the dishwasher handle with my little finger and I pulled it and I just pulled a muscle and it never recovered. I should have probably have taken that, gone into kind of get it surgically fixed, but I never did. I figure I'll go to my grave with a broken finger. You see that tail going across? That's actually this we're cat sitting, and this cat that I got here, she's very well, she runs the show here. She runs the show. So come on, baby. Face the camera. Why don't you say hi to the people? No, she's gonna sit right in front of one of my monitors. That's what she does. Uh, now you know who runs the show here. It's the cat. By the way, she makes a lot of the trading decisions too. And you might have seen some YouTube videos on that. We are on social media, so do sign in. Anyway, I people ask sometimes, "Oh, why do you bother trading? And just why don't you just trade and be done with it?" And well, frankly, I enjoy it. I enjoy teaching other people, and I really thrive on seeing the success of other people. Um, Making money is one thing, but the joy of seeing other people succeed and mastering this the skill is very it's very good. I really that's what I really thrive on. Yeah, we don't have to do this. John and I, we talk about this every now and then, so we don't really have to do this. We could just trade and we're good. But we both enjoy teaching other people. And when people come up to you and say, man, you changed my life, or I was able to put my grandkids through school, or get my son off on a business venture that he wanted, or I was able to buy that vacation home, or these kinds of things. They really resonate. They go deep in your soul, and you say, "Wow, it's worth doing this, right?" There's some real true benefit. It's not just making money; it's showing other people how to become self-sufficient, get away from their daily grind job, if you will. Anyway, I thrive on the success of others, and my saying, listen, folks, if you want what I have, you got to do what I do. Simple as that. If you want what I have, just do what I do. Hey, listen, I'm nothing special. I've not been blessed with any superpowers or any stupid thing like that. I had to work for everything I got. Work hard, I did. Studied hard, did all that stuff. Went through school. I did all that stuff. Same with John. He was not born with a silver spoon in his mouth. I worked very hard for it. Learned everything he needed to learn, and took the risks. And we're both doing very well now in our respective things, but we enjoy teaching other people. I guess, paying it forward, is that what they call it? Or I don't even know if it's that what it is. Just kind of giving back to the people out there. Anyway, you know what I'm talking about. That's what I do. And that's why I like doing this. Okay, that's why I like doing it. Let's take a look, folks. Before I get into that, I just want to tell you, Spy in the Market. This is a weekly newsletter. And very light, relevant, entertaining. It's only 750 words long. Go to daytradespy.com and subscribe. Okay, just get on the mailing list for our weekly newsletter. It comes in your inbox every Thursday, and it's a good read. And this week it's going to be Hugh meets Jess. Hugh meets Jess, and yeah, so interesting little story. Anyway, I think you're going to enjoy it. So do log on and get that. Now, if you don't want to subscribe, but you still want to see the newsletters, just go to our website, daytradespy.com. And up in the top left corner, you'll see Spy on the Market. That is the name of the newsletter. Click on that, and you'll see all the newsletters posted there. And I think there's like 150 of them. And yeah, they're all different. They're all different. They're all applicable. They get deep dive stuff, some of them. I say actually very good. All right, so let's take a look at the market, see what happened this week. Another interesting week on the market. We had lows dipping down to, oh my gosh, what is about 769, 770 there back on Tuesday, and reaching new highs, 779. Here's what happened on Monday. We had a broad sell-off, wiped out early gains, ran up the flagpole and ran right back down again, closed somewhere in the middle as investors rotated out of the richly valued growth stocks, got into a more defensive stance. There's a little head and shoulders pattern here that we identified, and the market went down on that. I think that head and shoulders was actually on the 5-minute chart more than the hourly chart, but ran up, came back down, and tested 773 before we came back up and closed up around that 773. That was on Monday. Tuesday, we had a little bit of a strong push into resistance. There's a resistance level up in here, and we were able to poke through that in pre-market, but we could not sustain it. Elevated oil prices, increased U.S.-Iranian conflict, they tanked the markets. Just couldn't hold it. We came right back down, lost, oh my gosh, 775 down to 770, a little bit below 770. So we lost about 5 points. And then hung around that, rose back up in pre-market on Wednesday. Wednesday, the markets were mixed, ran up the flagpole, came right back down again. Right? Influenced by strong earnings from the techs, but also faced challenges with uncertainty over the Strait of Hormuz. Some people say, oh, we're going to open it up. The other people say, no, we're going to have a blockade. Other people say, well, we're still fighting. Other people say, no, there's world peace. Yeah, okay, right. I think we had world peace about 40 times, didn't we? In the last few months. I don't know. Anyway, it seems to change a lot. Headline news is driving the markets, driving oil. Last I heard, Trump said, get used to high oil prices. Wow. Okay. The thing is, high oil prices affect everything, not just your local drive to the store or anything. It affects everything, and it's inflationary. Not good. We'll have to get that back down again. Anyway, SPY gained from the prior day, but still could not hold that opening price. Thursday, the techs and industrials led the way on a very positive stance. Inflation news pushed SPY to record high, 779.37. We came right back down, though still closed at that upper level. Into Friday, where we had disappointing retail sales numbers and a soft consumer sentiment report. That was enough to trip SPY right over the edge there. Volatility brought us down to 776, but we're still holding at that upper level here. Okay, we're over this upper range. I'm going to see if I can maybe draw in something here. Let me see. I don't know. Just a laser point. I think maybe I have to. Oh, nah. We'll skip over that. I think you'll see what I'm talking about here. Let's see if we can insert. Maybe I can insert something on the PowerPoint to show you what I'm talking about here. Insert. No, insert a. I'm going to draw. I have to draw a line. Draw a line. Maybe I can draw a square. What I'm trying to do is insert. Here it is. Here shapes. I want to kind of show you this here. See where this is the range. This is that upper range. I didn't really want that fill. How about if we say no fill? No fill, fill. Outline. Maybe we can do a little bit of an outline there. We'll draw the outline, give it a little different color. I don't know, we'll color it the screen. So there's that range, but we're still in the upper end of that range. So that's kind of cool. Just out of curiosity, let's see if we got some read on the futures of now. Still, okay, okay, looking positive. Looking positive. S&P is up 6.25. Now this can change, right? Both the S&P, sorry, the S&P, Nasdaq, and the Dow are also up, but this is going to change in by the time tomorrow opens. You know, who knows what it's going to be. But it's nice to see that we're still holding that upper range in there. And I believe there's going to be some pitchfork levels up there that's going to quite possibly push it higher. So we'll see what happens. We'll see what tomorrow brings. Anyway, moving along, seasonal charts. This is a look at seasonal charts, folks. For those who don't know, the blue line is the current SPY price, and the red line is the average of the last 5 years daily close price. Okay, which is kind of cool. And you can see how, well, let's just zero in on it, folks. Okay, let's just zero in right now. If you look at what happened historically, last week we rose about 10 points. And interestingly enough, we predicted that last week that we're going to see a close of about, come on down here, about 10 points in the following week, which was last week. Now, going into the next week, SPY stayed flat the following week into August the 21st. So there's going to be some bounce up and down. Not to say we can't make money, because we make money on the intraday movements, right? So we don't need much of a movement. That's the beauty of options. You don't need much of a movement to make some pretty good money with the leverage and the volatility. You have leverage, volatility, and so you get this leverage that say a $1 move on the SPY stock at a 50 delta means there's a 50-cent move on the stock. Sorry, on the option, and that's quite a bit. So if we buy an option, say for $3, a 50-cent move on a $3 move on an option is like 16, 17%. Is that right? I'm not sure. Is that right? Let's see. 50 divided by $3. Yeah, it's about 16, 17%. Um, I mean, it's pretty good. And we're not even looking for that much. We're looking for maybe, 3, 4, 5, 6%, something like that. Anyway, we get into that in the trading room. That's where we show you all this stuff. Here's what happened this last week. Cooling inflation. We had CPI numbers. They came in better than expected. Lower, I should say, lower than expected. PPI numbers came in as expected. Retail sales, I think, were a little bit higher, but essentially the inflation has cooled a little bit. Indexes are finding new record highs now. Now the Fed Reserve, they're remaining patient, and I'm sensing they're taking a less hawkish position now. A couple of weeks ago, most analysts were looking at elevated prices for the futures with the stronger likelihood of a rate increase in September. But now that's pretty well balanced off. I think it's actually reversed now. I think most last I saw was I think it was like 69, 70% figure there's going to be a no rate change, and about 30, 31% figure there's going to be a 25 point basis point rate increase. Now that has been changing every day, and it's kind of balancing out. So if inflation remains low, or it's not at the 2% level that they want, but if it remains stable, the Feds are probably going to keep interest rates the same, and the market likes that. Okay. Strong earnings, healthy economic momentum, and a steady consumer spending underpin equity markets. We had wholesale inflation. So I said the PPI and CPI, they were both eased, and that's good news. Inflation expectations remain contained. And this is what it looks like here. Headline CPI, core CPI, markets 10-year expectations. It's leveling out pretty good. And it also depends on the labor market. The labor market's got to be strong, and it is. The labor market's actually doing quite well. So we actually got a pretty good balance. And maybe if the Feds just recognize that, well, you know what, if we have a 3% or 3.5% inflation rate, maybe that's not so bad. It's kind of things that are steady. It's not good, but it's not, they want to really drill it down to the 2%. We'll see how aggressive they get next month in September. But as of now, the market seems to be okay with it. I think the market's more focused on things like the war and the price of oil, sort of longer term. But so far, it has not really been a huge, huge mover on the inflation needle. So we'll see what happens. Had a spike earlier this year. Longer term market-based inflation expectations remain anchored near 2%. They'd really like to get it down to those 10-year expectations of 2%. Came close, but no cigar a while back. But right now, here's what it looks. Here's the probability of the Feds hiking rates in September. That's fallen over the last few weeks. I mentioned 29, 30% as of Friday, and a couple of weeks ago, I just mentioned the 67%. Oh yeah, they're pretty sure. Oh no, rates are going up for sure, and the market came down. If you remember, there's this inverse relationship between the market prices and interest rates. If interest rates go up, the stock market goes down. That's just the way it is. And we saw that a couple of weeks ago, back in late July, actually. We were just kind of dragging along. The market was really, really pushing down. And we were concerned about, oh my gosh, the AI bubble is breaking and all this other crazy stuff going on. And here comes the big crash, right? The big short. In fact, I remember reading some stuff about some gentleman who predicted the big short years ago. He's predicting it again. So, I mean, they all predict, but I don't think it's going to happen. I don't think it's going to happen. Artificial intelligence is leading the pack right now. A lot of money into this, and not even sure that's a bubble. But as long as it keeps going, we're going to be okay. S&P rose 0.4% this last week. We're year to date 14.5, which is nice. We're only beat up by the Nasdaq. That rose 0.2% this week. They're still high, a little bit higher at 15.4% year to date. The Dow dropped a little bit, 0.5%, and they're currently trailing at 12.8% year to date. Still very good numbers. Very good numbers. I mean, if things don't, even if nothing changes between now and the end of the year, these numbers are nothing to sneeze at. But, here we are, middle of August. Wow, middle of August. My goodness, I can't believe it. So what is it? Let's see if we extrapolate this S&P divided by 8.5 times 12. We could be up around 20% year to date if these numbers on the S&P continue on to the end of the year, um, which is excellent, right? Excellent. Anybody with long-term investments sitting at 20% rate? Wow. Very good, very good. So it's market manipulation, call it what you will, but that's what it is. And we'll take it. So anybody long-term invested, but you know what? We make money short-term, every day, in and out, in and out, in and out. Here's the week ahead. Here's what it looks like. We've got the Empire State Manufacturing Index on Monday, also called the New York State Manufacturing Index. Housing starts, building permits, pending home sales on Tuesday. The Fed meeting minutes are going to be reviewed on Wednesday. Now, bear in mind the decisions are already made on that. They're just going to get into the detail and discuss what made them vote the way they did and where their thoughts are. Sometimes the meeting minutes report moves markets, but oftentimes it's just a reiteration of what we already know anyway. So nothing huge there. A little bit, but not huge. It could be. Unemployment claims, Philly Fed Manufacturing Index on Thursday and on Friday, S&P Global Flash Manufacturing PMI, and also the S&P Global Flash Services PMI report on Friday. As far as volatility is concerned, we're looking here at a medium on Monday, Tuesday, Wednesday, high on Thursday and Friday. We're still in Q2 earnings season, although we're winding it down. You're going to see a lot of the retailers retailers this week. Let me take a look and just see who is reporting this week. All right. The retailers and okay. Nasdaq earnings. Okay. Earnings season. Earnings season. Okay, what do we have? Excuse me, Monday. Anything important Monday? Nothing that's kind of coming off my chart here. Bally's, Home Depot. Okay, Tuesday we got Home Depot. Uh, excuse me, Toll Brothers on Wednesday. Analog Devices, TJ Maxx, Lowe's, Target, Viking Holder. Let's see, Estee Lauder, Nordstrom, Nordstrom. We have. No, let's see. What do we have on Thursday? Nordstrom, Walmart on Thursday. John Deere and Company, right? Ross Stores. Let me see who else. And on Friday, BJ's Wholesale Club. So again, nothing crazy. How about the following week? I'm just going to take a look real quick on, let's say, the 24th. We're kind of winding things down pretty good. Nothing really on the 24th. 25th, um, Dick's Sporting Goods, Zoom next week. Tuesday next week, Wednesday, NVIDIA. Okay, mark that down, folks. August 26th, NVIDIA is going to be reporting their forecast $2.01 for their EPS. Also on that day, CrowdStrike, Salesforce. And if I'm not mistaken, let's see, Wednesday, August 26th. No, that is not going to be a Fed meeting. All right, I thought sometimes they have them on the same time, but that should be okay. Hewlett Packard also, Williams Sonoma. But NVIDIA is going to be the big one, August the 26th. You'll want to pay close attention to that. So anyway, that's going to be red letter day, right? Okay, so let's get back to what we're talking about here. Also, expect volatility to increase whenever President Trump speaks. I have nothing scheduled for that, but that usually comes up the same day type of thing, you know? So take a look at that. If you're not subscribed to, well, you don't have to subscribe to it, just join in on forexfactory.com. Forex Factory, F-O-R-E-X, F-A-C-T-O-R-Y, forexfactory.com. And so you'll, you get all the latest scheduled news on that. All right, so here's the 2-minute tutorial. Pretty well the same as I did last week. Hugh, that's me, and John, that's my cohort. We are going to be doing a 4-week challenge. All right, the boss has suggested, listen, do a challenge. See which one of you guys is going to come in the winner. So what we're going to do is in the trading room. We're going to do this in the trading room. What we're going to do is we're going to take $2,000 each of us, and it's a little friendly competition to determine who's going to be the better trader. Now we do have different systems in trading and different, emotions. I mean, I sometimes go for longer term trades, whereas John might jump in and out faster. So, but we have, $2,000 with which to work, and we can add to the $2,000 with our earnings. It's not just a straight 2,000. We can add to them. So, in other words, if I make say $200 the first day, then I have 2,200 the next day to trade, right? That's how it's going to work. And we're going to start this tomorrow, Monday. And again, $2,000 each. You can see how much we're going to bring in the next 4 weeks. We are going to be doing this in the trading room, and we are going to be tracking it. Now, if you can be in the trading room, awesome. If not, please join the inner circle. You should all be in part of the inner circle anyway, costing almost nothing. And we are going to be giving you the updates in the inner circle as to how we did. We're going to track this on a spreadsheet similar to this. And we're opening up a balance here tomorrow, $2,000. Admittedly, does not buy you a lot, but we picked on $2,000 because there's a lot of new people who are just kind of starting out, and the very, very good balance to start out with just a mere $2,000. Also, the Security and Exchange Commission reduced the the what's it called, the day trade rule. That $25,000 pattern day trade rule no longer applies. You can actually go in and out as much as you want if you have a cash account, and you can start with really as low as a couple $1,000 and make some money. Somebody suggested, oh, start with $500. Well, we said, quite honestly, if you only have $500 to start, I would say save your money, put it in the account, don't bother trading it. Not worth the risk or the stress. All right, what you want to do there is just save your money until you have several $1,000s. All right, I think it's very important. $500 that can vanish very quickly, and now you're at zero, and you're discouraged. It's just not good. Start with just a couple $1,000s. We'll see where we take it. Admittedly, we're only going to get coffee money at first. You might make 30, 40, $50 that first little while, but it's going to accumulate over time. Before you know it, it's going to compound, and you're going to do very well. All right, so now I want to see who you guys are going to root for. I'm going to be in the trading room again in the inner circle. See which professional trader comes out ahead. Now, obviously, I have a little bias, and I want to make sure you're very clear. John is going to lose. Okay, I'm going to win. Because I'm hoping you guys all root for me, right? But if you really want to root for John, well, that's okay. You can stick around. I was gonna say you're dismissed. No, we're gonna have fun. It's all in fun, right? It's all in fun. Anyway, we've got this other program called the 2026 Goal. What we did here is we started with back in January, early January. I think it's January the 6th. And in the trading room, everything we discuss and narrate, if you were to follow along with us and only trade 5 contracts, this is where you would have been. All right. So we've been tracking this all along here for the last 8.5 months. 5 contracts per trade. All trading room trades are included. This is where you would sit right now. 43,765. Plus, there's a couple trades open. As a matter of fact, John here has a trade open as well. I did not note that as still holding. I am in a position here, which I averaged down, but I had to put that in as two trades. John is also still holding his position from Friday. And last I spoke to him, he was confident it was going to go up. It is a call position just like mine. So we're probably around $44,000 year to date. And that too is plowed along pretty nicely here. All right, just going to tell you about the trading room. I'm not going to tell you about all the other programs we have. We have several programs here. You can always check them out on your own if you want. Um, there's the QR code down here on the right. If you do miss it, I'll show you the QR codes at the end of the session as well. You can just take a picture of it and link in to the web page on those. Gives you more information on all of our programs, right? But the trading room here, you guys kind of get in on this now. I don't know why you wouldn't, except that maybe you're working, you just don't, you're not able to get in there. But if you're able to get in, join us in the training room. This is where our strategies come alive. It's a full-on training course that we talk about. We answer questions. We get into it. I know it can get a little crazy when we're talking about different things, and sometimes there's two conversations going on at once, but you'll quickly pick it up. I know it sounds like a horse race or maybe air traffic control, but before you know it, you're just going to understand everything that's going on. You're going to see what John's trading, you're going to see what I'm trading. John and I, we host this every morning. We have been doing it now since, well, since 2010. John's been with us for about a year and a half now. Folks, it's interactive. Learn and earn, fully narrated. This is where our strategies come alive every morning, 9:20 to 10:30. These are events. All right, they're not drop-in centers where people just come in and there's no chatter, there's nothing, and all of a sudden 10 minutes later somebody says something. That's not it at all. And then we don't hold you till, 4 o'clock every day, so you can't go, can't leave, can't do anything. We don't hold you ransom. We don't lock you down. These are events. People actually schedule their lives around this. And I remember this one doctor. Oh my gosh, the nurses would come in and, oh, doctor, so and so, you've got patients in the waiting room, and I could hear him. He'd tell his nurse, "Oh, just tell them to wait. I'm trading right now. They waited this long, they can still wait." Oh, doctor, no, you have to go. No, no, no. This guy comes in every month anyway. It doesn't matter. Anyway, these are events. They're exciting. They're fun. We laugh, we kid around, whatever. But we get serious too. We get very serious. And when we're looking at the markets and there's something going on, we are dead on serious and we are trading and we want to make some money. Now, people sometimes ask us, well, how many trades do you do? Well, we probably, between John and myself, we probably do four or five, six trades a day. We have the OMG trade, which is short for out of the morning gate. Little strategy we use there. I've got my little strategy. John's got his. We tend to review the pick of the day. The pick of the day is another subscription. You can't overlap them. Just because you have the trading room, that does not get you the pick of the day. They are separate programs. But we'll often go back and look at the pick of the day, see how that did. And usually we find that, oh my gosh, the pick of the day does very well. Last on Friday, we're in that trade for no more than 4 minutes. Got into 467 at 9:30, out at 495 at 9:34 for a nice 6% in less than 5 minutes. And this happens a lot, folks, an awful lot. That's called the pick of the day. You're given a pick every morning by around just after 9 o'clock. And this is the trade that is destined to be purchased at market open. Now, there's another one called DayTradeSPY Signal, which is sent to your cell phone 3 to 5 times a week. It's algorithm based, only in the mornings, and you could be out doing something or whatever away from your computer, but you get the signal and you flip over to your trading platform on your cell phone, you place the trade, immediately you put it up for sale for 5% profit target, walk away and come back later. Money should be in your account. All of these programs are very good. The inner circle, I don't talk a lot about that, but every trader should be in on the inner circle. Costs you next to nothing. You're going to get the morning market report along with a follow-up report later in the day. You'll also be invited to our weekly meetups on Wednesday nights. All really good. Now, the trading room. Trading room is also recorded for later review. Believe it or not, we have a lot of people overseas. They may not be able to get in it, but they want to see and learn. Maybe apply to something else. I'm not really sure what they do, but $24.95 for the year. That's a really good deal. But if you want to give it a try and don't want to commit to a full year, just go for the quarter. It's only $6.99 a quarter. Now, I believe these prices are cheaper than if you were to go to the website and get them. Don't go to the website. Go to this link right here. Get them for this lower price. The website is going to be, I understand it's going to be higher. I'm just kind of curious to see what the website is showing. And you're probably wondering why that is. There was a reason. I just don't understand. Don't know why the price was more. Maybe it isn't. Let's just take a look here. Subscribe now. DayTrade Spy Society. Just kind of looking here. Okay, let's go back in trading room. Subscribe now. Let's see what they charge you if you go to the website directly. Here you go, 49.95, 1 year only. Wow. Okay. Yeah, that's so you don't you don't have to pay the 49.95, folks. Okay. Go to the link. Go to the link that I'm giving you here. and you'll be able to get it for $24.95. So you're saving yourself a lot of money there, or $6.99 a quarter. And that's your best deal for $54 a week, less than half a Subway sandwich every day for one of us, John and myself. Trading room, this is where it happens. Everybody should be in on this. And you don't have to know the strategies. That's what we do is we teach you the strategies there. Sometimes I get that comment when people say, well, I don't know your strategy, so I don't want to be in the trading room. Well, that's exactly why you should be there. That's exactly why you should be there. If you knew the strategies, you wouldn't need us. If you knew everything that we do, you wouldn't need us. If you know how to the emotional control, all that stuff, that's the peripheral stuff that we talk about. If you knew all that and you're practicing, you're doing well, then you don't need to be here. But if you're not doing well, you want to improve your trading. In fact, those people that have been with us a long time, they're doing very well. They do very, very well. If you know what calls and puts are, this is where you need to be. All right, folks, let's see. What are we going to talk about? Oh, yes. Hey, listen, you're not sure what you want to do? Talk to us. Talk to us. Exciting new feature. Just schedule a free, no obligation one-on-one to discuss how we can help you become a great trader. Get 15 minutes on Zoom. That can make all the difference to your trading. We've had people coming on this call and they love it. Talk to us. All you have to do is go to our website, daytradespy.com, and up at the top here in the middle. See the orange banner right in the middle, schedule a meeting. Just click on that and you'll get my calendar, our calendar, um, many days, times. Um, I don't know if you need like 24 hours in advance or something. Schedule a meeting and let's discuss how we can help you become a great trader with our programs. I'll tell you what this schedule a meeting is not. It is not where you're going to call and pick our brains. Well, where do you think the stock's going to go tomorrow? I'm in some puts. Do you think it's going to go down? That's not what we're going to talk about. We're going to talk about how we can make you a great trader. We'll take a look at your experience, your style, your schedule, what how your budget, and make recommendations. And believe it or not, sometimes we recommend that, you know what, just hold off, keep putting money in your account, come back to us in 6 months. Let's take another look at it. Or, follow along in the trading room or follow along at the inner circle. And when you get a little more capital and you're ready to invest, then we'll look at it a different way, whatever. And I've even said no to people that because I just didn't think that they're gonna work, whether it's an attitude situation or some sort of competency level. I had I shouldn't even talk like this, but a long time ago, I had a lawyer. I think he was from Michigan somewhere. He called him up and he wanted to leave his legal profession is what it was. And we actually got into a couple of sessions. And then he asked me, Hugh, can you show me how to do percentages again? But I always sensed he had a lot of trouble with numbers. He was not a numbers guy. And at some point, I kind of fired him, you know what I'm saying? I said, Sean, his name was Sean. I said, Sean, I gotta tell you, I'm gonna tell you point blank, I don't know if this is gonna work for you. You're having a lot of trouble with numbers, and this is all numbers. This is all numbers. That's all it is numbers. And you have to kind of look at things and make, fast decisions, and if you're struggling with some pretty basic concepts like how to calculate percentages type of thing, it's, you may want to reconsider it. I don't want to see you blow up your account. If you want to continue on, we will, but I'd recommend that we just kind of maybe put it on hold for a bit. And then he did call me back later on and said, I got to thank you for that. Anyway, all right, schedule a meeting. Talk to us. Talk to us. We're here. We don't bite. What else you want to talk about? Okay, let's take a look here. Okay, well, let's go back here. Let's get to some questions, folks. Let's get to some questions. Okay, hello from Kansas City. Here I come. All right. Okay, I trade Qs and diamonds. Why are SPY options better? Well, I like SPY because, say, unlike the Qs, which is the tech-heavy stocks, and you'll see a lot more volatility in the tech sector. So whenever something major happens, it's going to affect the tech sector first. You'll see the tech sector, say, moving up faster, but it also moves down faster. And you get a company like, say, Nvidia. if Nvidia came out with, say, a really disappointing earnings season or something in a couple of weeks, whenever, it could pull down a lot of other stocks with it. You could see the diamonds or the Qs just crash and burn based on basically one stock. If that happens. See, the thing is with the SPY is the top 500 stocks. Now, it is tech heavy in that there's about 35% of the capitalization is the tech sector, the Magnificent Seven. You've got Apple, Amazon, Tesla, Microsoft, the top seven stocks, so they are going to be affected, but it's not as heavy as it would be on the Qs. It's not going to be quite as volatile. So it's going to be a lot of other stocks that are going to prop it up, and there's a lot of rotation too. So we're seeing a lot of rotation coming out of, say, the Magnificent Seven into some of the lower class stocks, because once the growth is made in a particular stock, well, the growth is there. So let's go look for the next growth sector or the growth stocks, put our money into that. Maybe if there's some really bad storms, Home Depot and Lowe's will be great stocks, right? Because people have to fix their homes, renovate their homes, and home improvements, different things like that. Maybe they'd be those to get into. Farming, John Deere. I mean, there's retail sector. So there's going to be a lot of rotation going on. Anyway, Fine SPY is very liquid, highest traded index out there. You can start with a little bit of money actually and do very well. You don't need to have a fortune in the market for that. The bid-ask spread is very nice and tight. That's because of the liquidity. And you get into some of these other indexes where you have a wide bid-ask range. Well, that's not good. So let's say you buy an option for the ask price of, say, $3, and the bid price is $2.70. You got a 30 cent gap in there. That's not good, right? Because now you got 30 cents you have to make up for just to get the bid ask spread. You haven't talked about commissions yet or any profit. And you want to know how much the stock has to move? Well, look at that bid ask spread, say that 30 cents I just mentioned. Divide that by the delta of the option that you're buying. So delta is 50. So 30 cents divided by zero point 0.5, that's 60 cents the stock has to move just to make up for the bid ask spread. Again, we haven't talked about commissions. I'll tell you, you don't get that with SPY. You get maybe, at that level, we trade maybe 3, 4 cents, maybe a nickel bid ask spread. You can handle that. That's pretty good. Data loss, right? With the way we trade, we try to minimize our theta loss, but still have that balance of profitability. You don't want to go too far out because now you're not going to get the profitability and they're going to be expensive options and maybe it's not going to move quite as much. And we don't want to tie up our money too long for this. We want to be in and out of there quickly. So what we try to do is buy a little bit of time, always buy time because that's your insurance. So on Mondays and Tuesdays, as a rule, we buy that same week's Friday's expiration. And then Wednesday, Thursday, Friday, we buy the following Friday's expiration. This gives you a good balance between risk and reward. So SPY to me is just the best tradable instrument out there. And again, the top 500 stocks, you can't beat it. There isn't any one stock that necessarily is going to direct the entire sector or the entire index. Okay, theoretically speaking. Okay, all right. Hope that answered the question. Gregory here from Kansas City. Get ready for high gas prices. Get ready for a Dem House and Senate. I don't know, John. Maybe it's gonna be crazy. It's gonna be crazy stuff going on. Uh, man, some of the interviews I've been watching, and wow. Anyway. What software are you using? Okay, so we use okay, so I like to trade two platforms. The platform that I show you is Schwab Think or Swim. Used to be TD Ameritrade Think or Swim, but Schwab bought it out. So it's Schwab Think or Swim. Excellent program, great charts, great indicators, got everything on it. Good timeliness. Now we have to by law show you the SIM account. That is slightly delayed by a couple of seconds. It's not that 20-minute thing, it's a couple of seconds. And but it's a rule we talk about the market in real time, real market conditions. Now for my bigger trades, I will use Tasty Trade because because the lower commissions and their speed of execution, lightning speed execution, and the commissions are only $1 a contract to enter position, zero to close the position, up to a maximum of $10. So if I'm trading 100 contracts, I'm only paying $10 for commission. You can't beat that. Okay, can't beat that. Commissions are okay for Thinkorswim. They're not bad. I don't even know what I pay for that, but I figure I still trade Thinkorswim as well because if I'm showing their charts and advocating for their charts, I should probably give them some business as well. So the charts I tend to show and tend to trade during the trading room is Thinkorswim. My other trades, if I do them after hours, I'll probably go with Tasty Trade because of all that other stuff. So a little more complicated. Their charts aren't as great, which is a little surprising, see, because the same people wrote both programs. I'm not really sure why. All right, so lost my volume. Matthew, I'm not sure. You guys can hear me okay, I'm guessing here. Okay, so who are you guys rooting for? Rainy, thank you so much. You for calls, John for puts. Smart guy. Okay, so yeah, so we have our kind of our biases, I guess. Um, John will never admit it, but he's got a bias for puts, and I've got a bias for calls, I'll tell you. And I'll tell you why, because every time when I go back on my log and I see where's my challenges, it's always been on puts. It's always been on puts. Um, hey, rat, get out of the way. I call this cat the rat. She's actually pretty nice, but she's very demanding, you know. Uh, can't wait to get rid of her. Actually, she kind of grows on you. Uh, I'll admit, when I get rid of this cat, so my daughter's she was at university in Texas at Houston Christian and couldn't have the cat there, so we shipped the cat back to Buffalo. You ever put a cat on a plane? It's about the same price as a person. This cat's got air miles, folks. Anyway, but we're taking care of her. I don't think she wants to leave us. All right, so trading, chart info broker, yes, charting. We're using Thinkorswim. Uh, okay, good question here. When SPY is moving against me, the downside could be a lot bigger than a 6% upside target. How do you protect against the downside? Okay, so that's a good question. Stop losses comes up a lot. We don't use stop losses per se. Okay. I found that when I use stop losses, they just don't really work on SPY options. You'll get stopped out a lot, and then all too often, if you just wait a little bit, it'll come back in your direction, and you're hurt again emotionally. First financially, then emotionally. So the idea here is that when you have our setups, that 6% is pretty easy to get. Okay. Or you may want to adjust it if the volatility isn't quite up to snuff, or if there's just a lot of stuff going on or nothing going on or range bound, you might be happy with 3 or 4 or 5%, whatever. So that's kind of a floating sort of a thing. But we stop losses don't really work. So, but we look at things from a macro level. We will take into consideration all the factors, fundamentals, technicals, market sentiment. We look at different things so that when we recommend a trade, we're pretty assured it's going to be pretty good. Now, sometimes what I will do, which is what I did the other day, okay, the market went against me, but I have time, so always buy time, even though you're going to be out of the trade hopefully in a few minutes, but if you're not, buy time because your theta loss as a percentage is going to be a lot less than if you buy something that's going to expire soon and you've got a really high theta loss as a percentage of the premium that you're paying for the option. And especially if you're buying, say, same day expirations. your theta loss is going to be virtually 100% of the premium, right? And when it goes against you, it's a lot of times it's not going to come back to where it was. Okay. So you have to kind of brace yourself for that. Be very careful about the risks of same day. You can make a lot of money, but there's also a high risk. Don't forget, there's always going to be risk, and the risk is going to be commensurate with the reward with the risk. So by buying time, you're kind of buying insurance, and you can kind of weather those downturns, those downdrafts. Right now, I'm sitting in some calls, so I have the option of either, and I've got time. I've got until next Friday for expiration. So it'll either come back on its own, probably Monday or Tuesday. I can repair the trade, which is something that I often do, or I can cut my losses at some point and just take some loss, but not, a huge, massive 80, 90, 100% loss. So that's kind of how we manage that. And John does a similar thing too. Now, John may be a little bit tighter. He may not want to hold on to an option as long as maybe I would. But we don't use stop losses like a percentage or a cent stop loss or anything. But we do manage our positions very much so. All right. Okay. Okay. Question here. I didn't get the SPY signal until 9:53 on Friday. You say it came out soon after 9:30. Is there a lag of some kind? All right, there are 2 days without a signal this week. Just want to make sure I'm not missing something. Okay, so Lisa, the signal is 3 to 5 times a week. And if you got it at 9:53, that would have been the time. So the signal doesn't come out necessarily at 9:30. In fact, probably rarely does. Because it needs that time, in there to determine the algorithm um, function as to when it'll trigger, if it does. It takes into account a lot of different things. It's not just a simple calculation. So what happens there is it could trigger right into probably 11:30 at the latest. I don't think it goes after 11:30. If you don't have it, say by 11 o'clock, consider that there's no signal. But it usually will be triggered somewhere between, 9:45 and 10:30, 10:45 as a rule. And if you don't get it 1 or 2 days, that's probably because there wasn't a signal sent. So, but watch for that. It should come, and as soon as you buy, just jump right in and get it. Put it up for sale, an immediate 5%. Walk away, come back later, and you should have your profit there. Thank you for that, Ed. Ed S, you have my vote. Awesome. Stephen, when your indicator says buy calls, is there an assumed time frame, like the first 10 minutes or first hour? Okay, when we say buy calls, now it depends, right? If it's the pick of the day and we're talking about buying a call option and you want to buy this at the market open. Now, if the stock is going against you, say on the 1 minute chart, wait until the pressure reverses back in your direction, then buy it. You'll get it for a discounted price. If you're in the trading room and we are looking to see, I am looking at getting into the calls right now. That's when I'm buying. If you want to follow along, you should buy then. Don't buy an hour later. That move may have been well over an hour later, right? Or 10 minutes later even. Like it says, you want to get it like as soon as we say it. All right. So when we say buy now, that means buy now. All right. Now, don't get excited if you don't get it for the same price as we get it, because I don't think anybody will get it for the same price. Doesn't mean we get it for a better price. You may well get it for a better price. The prices fluctuate, all the time. I was going to say second to second, but even faster, even faster. Now the trick there is if you want to buy it and the price is moving away from you in your direction, put up your buy price for a penny or two or three higher than the ask price. I know it's counterintuitive, but that's what you want to. You want to get in the front of the bus. Grab it when it's going up. You'll get the option. And you're putting pressure to move it in your direction to the upside with the demand, and you'll probably ride it up and take your 6% in a matter of a few seconds. That's how I do it. All right, folks, 8:57. I promise you, I'm not going to hold on to you forever. We are going to play. Pick a number between 1 and 100. Put it in the questions box, and I am going to bring up my Day Trade Spy random number generator. That is not the number you see on the board. 2 is not the number. I think that was last week's or something. And just give me the number here. All right, the number closest to The number closest to the number that I'm going to hit with the number generator is going to get the ebook, Triumphs and Tragedies. If you are, say, there's two people that are sort of apart or whatever, and it's sort of a tie, well, then we will award both of you the ebook, all right? So let's take a look here. Give me the, okay, where's it go? Okay, where'd it go here? Hang on a second here. Trying to find it. Okay, okay, so I'm going to give you another, say, 10 seconds to punch up your number here in the questions box. I think most of you have played this before. Same old group. Okay, let's see. 5, 4, 3, 2, 1. Okay, I think I've got everybody's number. Okay, all right. Now I'm going to flip over to the DayTradeSPY official random number generator, and I'm going to go 3, 2, 1. The number is 92. From 2 to last week to 92. Let's see who came the closest at 92. Okay, John H. Thomas, 74. 86 for JM. Okay, let me see. 80, is that 86? 86. So far, 86 has it. Okay, the winner is going to be JM. Okay, I better write the name down. Thank you very much, Jay. You are the winner. You came in at 86. So you are 6 apart from the 92 winner that we got. Congratulations on that. And you're going to get the ebook sent to you soon after this session, Triumphs and Tragedies. Thank you all for joining us, folks. And been a pleasure. Here are the QR codes for all of our services. The recording will be up shortly. It's been a real pleasure. See you the next time. Good night, everybody.
You really want it, and if you do it, just shout it loud and clear. I wanna know if you really need it, and if you do it, just shout it loud and clear. I know it's been on your mind for a while, but to get what you really want can take some time. You gotta be focused now, don't play around, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do it, just shout it loud and clear. I wanna know if you really need it, and if you do it, just shout it loud and clear. Loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one, shine brighter than the moon and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have